Hello, everyone, and welcome back. Today, we're going to be talking about a new indicator. It's called the Moving Average Convergence Divergence, or what everybody else calls it, the MACD, because it's quite long. So, the MACD is a very simple indicator. It's a trend following momentum indicator. Now, what does that exactly mean? So, trend following basically it means when the trend is going up, the MACD is going up. When the trend is going down, then the MACD is going down. It's very simple. A momentum indicators are basically technical tools that allows us to measure the strength or weakness of the price action movement. So it basically shows us the movement of the market. Simple as that. Now, like I said, the MACD is very simple. It's very good. Like it's very well established in the financial analyst like community. But when you analyze a chart, always remember to use more than one indicator because your result will be more accurate and you will be able to understand the market quite better. All right. So let's start with the theory of the MACD. We start with the theory. We're going to talk about everything there is about the theory. Then we're going to see a real life example. And we're going to try to understand how to identify buy and sell signals using this indicator. So the MACD is consistent of four major parts. Remember that four: the zero line, the MACD line, the signal line, and the histogram. Now we're going to talk a little bit about each. So let's start here. Let me remove this drawing and let's start with this line right here. So the zero line basically, this is where the MACD line, the signal line usually move around. So if the MACD is above the zero line, that means the market is bullish. If the MACD is below the zero line, that means that the market is bearish. It's simple as that. Now, the typical settings for the MACD is 12, 26, and 9. Now, what does that exactly mean, 12, 26, and 9? So you got to remember the MACD, we use moving averages here. It's called the moving average. So we usually use moving averages on the price market to try to draw the MACD line. So let's start with the MACD line. The MACD line usually goes something like, for example, let's go like this. Let's go like this. Okay. This is gonna be our MACD line, and we're gonna put it in blue. Okay. So this is going to be our MACD line. And it's calculated by subtracting the 26 EMA from the 12 EMA. So exponential moving average. We use the 26 and we subtract from it the 12, and that will give us this line basically. Now, the third part is called the signal line. And the signal line basically comes from the 9 section. So what did that mean? Basically, it's a moving average of the MACD line. So basically, it has a little bit of it tries to smooth out the MACD line. So it's gonna be something like this. Now let's change. I will change the color a little bit later. So for instance, if it's going like this, like this. For instance, let's say it went like that, and we're gonna put it in yellow, for instance. So the yellow is the signal line. The fourth part is called the histogram. Now, by the way, just to explain why it's called a signal line, because we get our buy and sell signals using this line. That's what helps us get it. I'm going to be explaining about that a lot in the next few minutes. So, but the last part let's talk about is called the histogram. And a histogram basically it shows us the moment. So it basically shows us the like how far the signal line is from the MACD. And it's gonna be hard to draw it a little bit, but let's try. Hold on. So basically, you'll see it on the market is like something like this. Then it's gonna be like even dropping more, even dropping more, yeah, something like that basically. And you're gonna see it in a live example. I'm gonna explain it how to use it exactly. So how do we use this indicator? Like how do we use it? So there are three major ways we use this indicator. The first thing is called crossovers. What is a crossover? It's basically when the signal line crosses with the MACD line. So for instance, let me show you here, your brush. This point here, right, change this to black. This point here, this point here, and etc. and go on and go on. So this is clearly, so when the signal line crosses above, like you see here, above the MACD line, it's basically a sell signal. So we sell here. This is where we sell, and the price drops down. We make our profit. We cash in. Then we see that another crossover happened, and the MACD line is above the signal line. Then this is a buy signal here, and we buy, and the market goes up, and that's how we make our profit. This is the first way to use the MACD. The second way, a lot of people use the histogram. Okay, like I said, the histogram, it just shows the distance between the MACD and the signal line. It basically shows us the momentum of the market, like it's if it's gaining momentum, if it's slowing down. So what people try to use, like they try to anticipate when a reversal is going to happen. Now, what does that mean? When a reversal is going to happen? So they look at the histogram and they see that the histogram is actually going down. That means, like, let's say we are in a bullish trend right now. So the market is going up, but at the end, like we don't know when the end is. You got to remember that. So we see that the histogram is actually dropping and dropping and dropping. That basically signals us. It tells us that the market is running out of steam. So it's basically losing momentum, and a reversal could be happening soon. That's basically how people use the histogram. The third part is called divergences. So what is a divergence? I always talk this in all of my videos. I'll talk about it in all of my videos because it's very important. The divergence is basically when the indicator is not going in sync with the market. So the market's going up, but the indicator is going down. And that usually signals a reversal. Now we're going to look at a real life example, and we're going to see how we use this indicator now and how to add it to your trading view chart. So let's clear all of this, okay? And let's go back to the no more templates. Okay, so here we go. This is a 4-hour chart of Bitcoin USD. Okay, so the first thing we got to do is add our indicator. So we go to the indicator tab and we just type MACD. Here we go, MACD. And we can see the MACD right here. Right? So as you can see, it's a trend following. So the trend's going up, the MACD is going up, trend's going down, the MACD is going down, etc. So this is our zero line here. See it? Zero line. And this is the histogram. So if you can tell here, look at how the histogram grows when the distance between the signal line and the MACD increases. Simple as that. So let's start by looking at crossovers. So for example, we go actually let's look here. It doesn't matter. So look around here. Look what happened. So basically the MACD rose above the signal line, which is a buy signal. So for instance, if we bought around here, which is going to be around 29,900, and we rode this wave until it reached here, which is basically 39,000. So that's a $10,000 difference in this trend alone. This is what a buy and sell signal is. So for example, here, look at this here. So as you can see, it's clearly a sell signal because the signal line rose above the MACD line, and the market dropped from 42,000 to roughly 38,000. That's the first way. The second way, as we talked about the histogram. So look at the histogram and how it's moving, like how it's increasing and decreasing. So basically, what people try to use is to understand, like for instance here, look, okay, the histogram was good and it started dropping. It's basically indicates a reversal could be happening, and a small drop did happen. Like the price dropped from 40,000 to 38,000 in a matter of 4 hours. That's the second way of using this indicator. The third way is called, like I said, divergences. Now, let's look at a real live example of divergences. Hold on. Okay, so let's say, and this one kind of looks clear. Okay, so look at this, for example. If we want to draw our trend line, so we can see that we are having lower highs. So this is the first high, this is the second high. But if we look at the market itself, like the indicator itself, the highs are getting higher. So it's basically the market is not in sync with the indicator, and it could tell us that a reversal is due to happen. And as we can see here on this live example, a reversal did happen. Like the price actually dropped from 39,000 all the way down to 31,000. Like look how the price here dropped. Let me show you. This is basically how a divergence usually works. And that's everything you need to know about the MACD. It's quite simple, it's quite easy to understand, and that's it. Thank you all for watching. If you enjoyed the content, please like and follow, and I'll see you guys next time.